Which is the better restaurant stock to buy? McDonald's, Domino's, or Chipotle? I'm going to answer that question in this video comparing the three stocks across four different metrics. So let's get right into it. You're not going to want to miss this video, so
All
stay
right,
tuned. Starting with revenue, looking at this metric, McDonald's is way ahead with revenues of 23 billion in its most recent fiscal year. Next up is Chipotle at 8.6 billion in revenue, followed by Domino's in 4.54 billion in revenue. And another trend to pay attention to in this chart is the direction. So McDonald's has been on a downward trajectory in the last decade in terms of revenue, while Chipotle has been on a rapidly accelerating revenue, and Domino's as well has been growing revenue, although not as rapidly as Chipotle has. So, however, in the near term, McDonald's has made significant improvements in its digital channel that has allowed nice growth ever since bottoming out at the pandemic. You see that here, where sales cratered here in the pandemic as it had to close its restaurants for in person dining, but it's rebounded very nicely. I think management made really good decisions during the pandemic, emphasizing the digital channel, rolling out the rewards program, and partnering with food delivery companies like Uber and DoorDash, which makes the reach of each individual restaurant wider. And that's great news for McDonald's longer term. Meanwhile, Domino's, of course, benefited during the pandemic. Ordering pizza was, one of the most popular things people did during the pandemic when restaurants were closed and you couldn't dine in person. Domino's was, it seemed like tailor made for a time like that to thrive, and it did thrive. Although now Domino's is facing um, troubles with finding enough people to work at its locations, right? Demand hasn't really come down for pizza. Surprisingly, people are still ordering pizza. There was concern that we would experience pizza fatigue after the pandemic, but that hasn't been the case. Demand has been strong, but the difficulty Domino's is having is labor. They can't get enough drivers, they can't get enough people to work at the stores, and that's been really hurting their growth. And this came as a result when all of the other businesses started reopening, right? Other restaurants started bringing people back to work. And then rideshare companies like Uber and Lyft, they started to experience an increase in demand. So drivers were attracted to rideshare companies. So Domino's had a harder time attracting drivers. And then many other businesses reopened. So those people that would potentially be working at Domino's now have more choices where they can work with potentially more flexible schedules. And so Domino's has had a very hard time, and the CEO has been complaining about this for almost 8 consecutive quarters now, ever since the economic reopening gained momentum. The CEO of Domino's has been complaining about driver shortages and labor shortages. That's likely to persist at least in the near term. Now, if the economy enters into a recession, that might help Domino's in terms of recruiting drivers. And at the same time, Domino's is a relatively low cost option for people who want to eat when they choose not to prepare food themselves. So, considering the circumstances, Domino's and McDonald's, for that matter, might benefit from a potential economic recession, while Chipotle stands to lose the most from a potential economic recession because Chipotle has instituted several rounds of price increases on its menu items to help pay for the rising cost of goods sold. And Chipotle has instituted several rounds of wage increases to attract employees. And so its costs have risen. If there's a recession, I don't know how likely people are going to be to pay $12 for a burrito. So if you're thinking that the economy might enter a recession, McDonald's and Domino's will could benefit, while Chipotle stands to lose the most. The next metric I wanted to look at is the cash flow from operations to sales over the trailing 12 months. This shows how good the companies are at turning sales into cash flow. And looking at this metric, McDonald's is dominating at 31.86. Chipotle is at half this level at 15.32%. And Domino's is about one third at 10.48%. Operating profit margin over the trailing 12 months going back in the last decade. Again, McDonald's dominates in this metric at 44.62% and accelerating that difference, right? Look at this from 2016. They've really increased in this regard. And then Domino's relatively stable at 16.93%, while Chipotle is fluctuating mixed up and down and at 13.68%. Notably, McDonald's continues to benefit from the digitization. I'm sorry, that was hard to say. And, as labor costs have risen, McDonald's has rolled out the digital kiosk ordering systems. That's helped save McDonald's a ton of money on labor. And at the same time, partnering with Uber and DoorDash and the digital ordering system also helps McDonald's with labor as well, right? Because if you're ordering on the app, McDonald's doesn't have to pay for cashiers and drive-through agents, right? So all of this has been good news for McDonald's, and that's helped drive McDonald's profit margins higher. So finally, I wanted to look at their valuations, and I chose to use the forward price to earnings ratio. And according to this metric, Chipotle is the most expensive at 31.56. Next, it's McDonald's at 22.87. And finally, you have Domino's at 21.1. So if I had to pick the best restaurant stock to buy right now, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would say it's McDonald's. Domino's has too many headwinds in terms of drivers and labor shortages. Chipotle is too exposed to the risks of an economic recession, which is increasing as we continue on the Fed rate increases, recent bank failures. All of it is pointing to increasing chances of an economic recession. So, all things considered, I would buy McDonald's stock out of these three right now. Okay, so that's all I've got for this video. If you like this video, I've hand selected a few videos that are popping up on your screen right now that I think you'll enjoy. So please click on one of those and I'll see you over there. Thank you so much for watching.